It's tax season, that time of year where we gather our poorly filed paperwork, try to read convoluted tax codes, and justify another trip to McDonald's for a chance to get Boardwalk. It's also a time when a lot of Americans have more liquid funds than usual thanks to tax refund checks. If you've been thinking of buying your own home, but you didn't have the money on hand for a down payment, your tax refund check may be the key. If your first thought is that your refund isn't enough, try to forget the notion that a down payment has to be 20% of the cost of the home. FHA and even many conventional loan programs have lower than 20% down payment requirements. USDA and VA loans are actually 0% down programs. That means you could use that money for improvements, to pay for the moving van, or whatever else was holding you back before. If you decide to use your refund to make a down payment, the best bet is to make sure you do the direct deposit option when you're asked how you want to receive your refund. That will keep any questions from popping up during the process about the amount of money and where it came from. But what if you've already received your refund and you opted to get a check instead? That will be deposited as coming from the IRS, so that's fine. Just make sure you can get a copy of the check in case someone asks. If you cashed the check, it's a little more complicated. If you cash your check, the only way you can use the money for a down payment is to deposit it in your bank account at least 60 days before the start of the mortgage process. There are laws around large cash deposits that create that requirement, but you can still use that money for a down payment. If you have any questions about how a tax return could be used for a down payment, please leave them in the comments or email us directly at info@callequity.com. Thanks for watching.